Okay, so can everyone hear me? Good evening. You can unmute your mics just to respond. I just want to know that you're hearing me.
I'm hearing.
Okay, hello, Christine. Hi, Debony. Hi, Marceline. Okay, so I have a reputation of starting things on time, especially presentations or classes. So we're going to go right into it. Typically, I include a slide like with um, my credentials and all of that, but I'll just tell you all of that because you can go and just type my name into Google and all of it will come up. So we're going to skip through that. This meeting is slated to run for approximately 30 minutes. 30 minutes at most is what we're aiming for. So I'm going to be giving you a lot of information very quickly. The aim of this meeting is not necessarily for you to become an expert in cryptocurrencies. What I'm aiming for is for you to have a fair understanding of the asset class, as well as a very detailed overview of Pi itself and the economy that we created on the Telegram. So we're going to talk a lot about Pi. I'll be going to their website and showing you some of their use cases. And I'll also share with you why it is that I don't think you should try to mine Pi because of capital gains. So capital gains are basically where you're expecting that, okay, as soon as this thing launches, it's going to fly through the roof and it's going to give you a 125,000% like Dogecoin did and some of these other currencies, all right? That I'm going to explain to you why that might not be the best thesis for you to have around Pi cryptocurrency itself, all right? So on the screen is a disclaimer, and it's important to note that cryptocurrencies are extremely volatile. You would have known this, and are just inherently extremely risky. And the possibility does exist for investors in a particular currency to lose all of their capital. For this presentation, that concern is not necessarily a key because we're focusing on Pi, which is in its beta stage of development. So you invested no capital, thus and therefore you cannot lose anything. All right. Importantly, I am not a financial advisor. This is my disclaimer for my stock market classes. But it's important to note here, since we're on the topic of discussing an asset class. So I'm not a financial advisor, and all the information that I'm sharing with you here today is strictly for educational purposes. It is not meant to um, constitute financial advice or investment advice, and you are strongly encouraged to speak with your licensed financial advisor when it comes on to making any investment or financial decision. Okay, so here's what we'll be covering in this presentation. And I'm going to be dealing the cards quite quickly, as I mentioned, because we want to get to the second to last item on this list, which is the Pi overview and workshop. Now, because of the nature of this meeting, this workshop, we're not going to go into full details as to how to set up Pi. That's what the community is for, and I'll hold separate calls for us to do that in terms of setting up your wallet, mining your Pi coins every day, and even like expanding your own personal network so as to increase the mining rate for your Pi coins. All right. So quickly, we're going to run over the history of money. We're going to talk about the barter system and how we transition to fiat currency. Then we're going to talk about the functions and disadvantages of fiat money. And then we will see how the banks and financial institutions tried to fix some of those issues by converting to digital currencies. Um, we will then make the very clear distinction between digital currencies and cryptocurrencies. It's often they're often depicted as one and the same. They are not, and we'll talk about why. Then we're going to look at the manipulation of money supply, which served as the motivation for the creation of cryptocurrencies. We're going to look at blockchains and cryptocurrencies, as blockchain being the fundamental technology behind cryptocurrencies. Then we're going to talk about some crypto wallets and some crypto exchanges. And particularly, I'm going to include some of those that are available if you're in Jamaica. And then we'll get into really the meat of the matter, which is the Pi overview, as well as setting up Pi, going through the app, and then seeing what are the different stuff that you can do with Pi. And we'll talk also a little bit about what the test net, the economy that we developed on Telegram is about. And then lastly, just as a bonus, I'm going to explain what it is that I myself as a value investor look for in cryptocurrencies and in digital assets as a whole. And that will kind of give you an idea as to what you can look for if you decide to subscribe to the same investment philosophy as myself. Okay, so history of money. And again, we're going to go quick. So before there was money, people basically acquired and exchanged goods through what is known as the barter system. Now, the barter system was a very simple system wherein if I had something of value and you had something of value, and I wanted what you had, then what I would do is I would offer you something that I already own in exchange for that thing that you have. So the classic example is a person who is probably a farmer and a baker. So the farmer is able to exchange like fruits and stuff with the baker to get bread, because a farmer doesn't have the expertise to bake bread. And since there is no money, it's simply what they do is exchange the value between themselves. So I give you something that you might potentially want, and you give me something that I want. We'll get into the big problem with this system, and it should be obvious. What if I want something that I want something from you, but all of the assets that I have, you are not interested in any of those. You now end up in a situation where it's required for me to now go and find somebody with something that you want, exchange with them, hopefully, something that I have that they want, and then get what it is that you want from that person, and then come back to you to give you what you want so I can get what I want. You see how cumbersome that system is, right? So because of that major problem, the financiers at the time decided to come up with a medium to exchange value, something to represent the fact that, okay, what you want is valuable to me and what I want is valuable to somebody else. So let's create a medium, an intermediary thing that will be accepted by all of us, such that if I need something, I can just exchange that thing for whatever I want with whomever I want. That is money. All right. So the first coins were minted in Turkey way back in 600 BC. This is well back. And then subsequent to that, paper money was first introduced in 770 BC in China. There were these large stacks of large sheets of paper. I didn't, do I have an image of it here? No, I don't. Right. But that was what fiat currency first looked like. And we've been using that system now for well over 5,000 years. All right. Now, Fiat currency, that paper thing that the Chinese developed, is what it became known as fiat currency. So fiat currency is quite simply money in the form of paper or coins issued by a central bank or a central organization that is supposed to be used among its population as that means of exchange or as a store of value. So say going back to the barter system, one of the issues would be how do you store the value for future use? So I know that Mas John is going to need apples 3 months down the line, but my fruit has come into season at this present time. Quite likely, and especially in those days, I run the risk of my apples going bad before I'm able to exchange them with Tom or with Dick, right? So that problem was solved by using money not only as a means of exchange, but also as a store of value. It is not a foolproof system, however, and we're going to get into some of the very evident, well, evident if you know what you're looking for, evident limitations of money. So quite simply, to review the functions and definition of money. So money is just defined as an agreed unit of exchange of value. That's quite simply what it is. If you and I agreed that an Aki leaf was a unit of exchange that we would accept for services or products, then that leaf would become money. All right. I would have gone into a little story about when I was younger, but if we have time for that, I'll come back to it. All right. Now, money is defined to have 5 main attributes. Number one, it is supposed to be fungible. That means it's supposed to be interchangeable. So one of your dollars is supposed to be equivalent to one of my dollars. And if I take a dollar from you and give you back a dollar, the value is supposed to be maintained between the two. All right, it's supposed to be durable. It was created for durability, such that it will last over multiple transactions or over a season of time, years ideally. All right, it's supposed to be portable. You're supposed to be able to move money around very easily and quite conveniently. It should not be cumbersome to carry, and that is going to be something that we look at as a limitation of some of the early forms of money, the earlier forms, such as like the coins, the coins of Turkey, as well as gold and silver. There was even a time when stones were used as money. But you can imagine how difficult it would be to say transport, say the amount of money you would need to buy, I don't know, 100 acres of land. That would be a whole bunch of stones. Um, so fiat money was created such that it should be easy for us to carry around. It should be recognizable. So it should not be difficult for somebody to recognize that, oh, hey, that's $100. And we're going to look at the disadvantages of money next. But you can see how creative persons have become, well, have devised ways to kind of negate the authenticity property of money. So you can literally print a counterfeit $100. It looks the same. So if you're just trying to recognize it on site, then of course that's not going to work. You will end up giving away your value for something that is ultimately quote unquote worthless. Um, and lastly, it is meant to be stable. So the value of money should be relatively constant, or taken to the extreme, it should actually increase over time. I don't know if you're picking this up, but at the current time, most of these property fiat currency fails in most of these categories. So this picture from Batman exemplifies a lot of the problems with fiat money. So the disadvantages: you have large transaction cost. Not very evident from this picture, but that is the case even in the digital system now with like bank transfers and stuff like that. If you want to think about it in the olden days, moving your money still cost a lot in terms of doing that transaction. Getting your money from point A to point B would still cost you a significant penny. Secondly, it's fairly easy to steal. It's fairly easy to lose, and it's fairly easy to destroy. Hence, this photo. The Joker in this case robbed the banks, so they lost their money, and then he just lit it on fire. So all of that value would have been destroyed just by that one action. All right, these are the problems with fiat currency. We just talked about how easy, relatively easy it is to be counterfeit, and the other two um, disadvantages of it are actually leading us into the reason why banks eventually went to the digital money system, because your fiat currency was subject to inflation. So the more they created this paper or these coins, the less valuable those coins became. And then secondly, the money supply is subject to manipulation. Now there's a whole slide where we're going to talk about that. And in fact, that one line, that single disadvantage of fiat currency is the primary motivation behind cryptocurrency, and especially Pi. All right, so we'll talk a little bit more about that as well. So how do we solve the issues of it easily being stolen, of it easily being lost, of it easily being destroyed? Well, some geniuses, they were physicists at the time, came up with an idea that what we could do is, instead of representing our money as physical money, what if we represented them as digital money, so as bits on a computer? So no longer is your 100 million represented by 100 million $1 notes in a bank vault. It is now quite simply a line in an Excel sheet on a computer. For most of us now, we transact using or bank cards, right? You very rarely, well, Jamaica is still one of those countries, but you most frequently use like a bank card for online transaction and stuff. And in other societies, in China, for example, it's a completely digital economy. So there are cities in China where there is no paper money distributed. All right. Now that is digital money. So what's the difference between a digital money, well, a digital currency, and a cryptocurrency? The banks would have you believe that they are one and the same. This is not true. A digital currency is what we have today. It's really what we operate with. It's your money on an ATM. It's your money on an online bank account. It's your money on your card. That's a digital currency, but it is not a cryptocurrency. All right. Investopedia defines digital money as payment that exists purely in electronic form. This is exactly what I just said. I just put it on the slide here because I know I'm going really fast with you guys. So digital money, unlike your dollar, is not tangible. You can't touch it, but it is still used to represent value, and it is still used as a means of exchange. And as I mentioned earlier, it's accounted for using Excel sheets, or more elaborately, you can use different computer programs, or they're called MySQL databases. All right. So key takeaways from digital money. This is just here for you guys to read, but it's just money in a digital form. It is no different than your fiat currency, except that it is not tangible like gold or oil. Digital money can include cryptocurrencies, because cryptocurrencies are also a digital means of exchange that you cannot touch, but digital money, digital currency as it exists right now is not cryptocurrency. All right. Now, banks have been able to keep the cost of their business low thanks to digital money. Of course, they don't need to pay rent for the vaults. They don't need to have physical locations. They don't need to employ as much security to watch over said vaults, and they don't need to worry about such things as like the cost of moving a huge chunk of their money from one location to another. You guys see the Brinks trucks that move around collecting money, right? That's a big loophole in the fiat money system. So just think about that situation and think about the disadvantages that I alluded to earlier. So what are cryptocurrencies? How do cryptocurrencies differ? Now, cryptocurrencies, similar to digital money, are representations of money digitally. However, they exist on what is known as a blockchain, and they are backed by cryptography. That sentence and the existence of cryptography. I'll show you guys in the group a very simple example of a cryptograph and how it is solved and how it generates solutions. All right. Cryptocurrencies are the solutions to complex cryptographic problems. I'm going to need to expound on that, but just bear with me for that for now. So let's say, for example, you had a program that solved a quadratic equation, or it calculated, say, the number of permutations from a string of numbers. The solution to that problem would be your Bitcoin. Now, I use this image to represent cryptocurrencies, but it's something that I honestly, it's one of my biggest pet peeves, because you would never and you will never see a cryptocurrency minted in a coin. Worst of all, a tangible gold coin. That will never happen. All right. So this is a very poor representation of cryptocurrencies. I'm going to see if I can find. I have an image that shows a better representation of cryptocurrency. I will show that afterwards. I think it's in this presentation, as a matter of fact. All right. Now, the blockchain, which is the next thing that we're going to talk about, is a very important aspect of cryptocurrencies themselves, because it is what solves the other two problems, the inflation problem and the manipulation of the money supply problem. We're going to talk about a blockchain so that you guys can understand it. All right. Now, I said I'm going fast just to get through the presentation, but for the Q&A section, which we'll do as another Zoom call immediately after this presentation, for that, you'll be able to ask me as many questions as you like, all right? And we'll go through the presentation. We'll go over the slides of the presentation. But just to remind you, if you're having specific questions, write them down and we'll get to them in the Q&A call, which is following this presentation, all right? So the major difference between cryptocurrencies and digital currencies are these. Number one, the cryptocurrencies are created on a blockchain. We're going to talk about what a blockchain is. And secondly, they are backed by cryptography, whereas a digital currency is quite simply a digit in a computer system. Do you see the big difference? So there is no mention of a blockchain, and a blockchain is a complex technological system. And there is no cryptography. There is no work that is being done to create your digital currencies. If the bank tomorrow decides that they want to go from having $100 million to $10 billion, all they would need to do is to write to the IT department to go into the system and put in two or three more zeros. It is that simple. All right. Now, cryptocurrencies also are better in a way, in the sense that they demonstrate all the fundamental features of money. Remember what those features are? The fungibility, the the stability, the fact that it is easily transportable, the fact that it is easily recognizable. All of these things are things that cryptocurrencies do far better than fiat currency, and in some cases, in most cases actually, much better than digital currency. And the last point on this is that the first cryptocurrency that gained popularity was Bitcoin back in 2010. However, Bitcoin was not the first cryptocurrency. And in fact, there have been cryptocurrencies developed as far back as the 1990s. Bitcoin was just the first one to basically take the main stage and run up as much as it did. And that brings me to a point as it relates to Pi. All right. Pi, the developer of Pi is a Stanford PhD that did his master's and doctoral degrees in cryptography and in blockchain development. And you can go, we'll go and look, but you can see a laundry list of his publications. They are excellent if you can dedicate the time to go through and read them and kind of understand. Now, you do need to have some basic level of understanding of the jargon, the technical jargon associated with cryptocurrencies in order to fully understand it. But that's a part of what I aim to do for you guys in the economy that we created. By the way, the reason I use the word economy is because that's exactly what it is. I will only be able to exemplify this by us working in that space. But you will eventually get to appreciate what I mean by calling it a economy. Okay. So the cases for cryptocurrencies was quite simple. Number one, it was meant to put back the power of our monetary system in the hands of ordinary people. Secondly, it was meant to and is a faster, more efficient, and more secure means of conducting financial transactions. It solves a lot of the limitations of fiat currency, as we discussed, and it prevents manipulation by a small group of individuals of the money supply. All right. So now we're going to talk about what that manipulation of the money supply looks like. And by the way, the money supply is manipulated constantly and pretty much every day. All right. So manipulation of the money supply. The money supply changed from a system of basically running printing presses way back from the first time the Chinese did it in 570 BC to one where it came down to basically pushing buttons. So with a push of a button, you can manipulate the money supply. And that is currently what happens in our current financial system. Now, I don't know if most of you would have been following the news, but you would have realized that in the pandemic, the United States, and I can bring this back to Jamaica, but the United States printed 1/3 of the total amount of currency that they have in supply in order to do the sorry, something distracted me. Sorry, in order to do the checks that we did, right? So I have 10 minutes left. You can see that I went over time here. Right. So in order to do the checks, I don't know why the name escapes me. Um, but yeah, in order to do that, the banks and the financial institutions printed a whole bunch of money. It's not the first time they've done it. They did it back in 2008, except at that time, they did not give the money to individuals. They gave it to the banks. And I'm going to put a video in the group for you all to watch to get a full understanding. It's 4 hours long, but trust me, you watch it, you will fully understand the financial system. I stand behind that 100%. All right. So most of the money that was created in both of these times when they manipulated the money supply, when they did it in 2008 and gave it to the banks, as well as when they did it in 2020 and gave it to ordinary individuals, the majority of this money did not go into the economy. What it did was it was used to prop up the prices of assets. So that's why the stock market went to all-time highs, and that's why other asset classes such as gold reach all-time highs, and even cryptocurrencies no. That's a very important point that requires belaboring, but I'm going to have to do that in the Q&A section. All right. Now, the consequence of this manipulation of the money supply is that a significant devaluation event and subsequent inflation is going to follow. And we've already started to see it happening on the world stage with commodity prices going up. So gas prices have now shot through the roof. Wheat has shot through the roof. Even silver and gold prices have gone through the roof. Now that has a domino effect in the sense that because of these massive prices in the fundamental building blocks of our economy, or the raw materials that we use, we're going to see the price of bread and, for example, as well as all of the other byproducts or secondary produce increasing. So that is why chicken price has now shot up so much. It's because they printed so much money, the price of commodities went up. So now grain and corn and whatever, which is what they use to feed chickens, has now skyrocketed. And so the people who rear chickens need to increase the value of chickens for their businesses to remain profitable. All of this stems from one thing: manipulating the money supply. And that's why the blockchain system helps in solving this problem. And that's why it's being pushed so heavily. So what is the blockchain? All right. Now, a blockchain is, I'm going to put this as simply as I can. The definition of it is that it's a system which records all the transactions that are happening across a network, and they are maintained across several computers that are linked in a peer-to-peer network, i.e. the internet. A blockchain is maintained in what is termed as a distributed ledger. I'm going to explain what a distributed ledger is. If you think about an Excel spreadsheet, you can enter information in the Excel spreadsheet. Think about it as a Google Sheet more specifically, not just any Excel spreadsheet, but a Google Sheet. When you share that Google Sheet with, say, 3 or 5 individuals, and everybody has the same, first of all, before I go there, once it's shared, everybody can see it. Everybody can see everything that happens on that Google Sheet. No, that Google Sheet is basically distributed among everyone. Let's take it one step further and say now, for any changes to be made to that Google Sheet, everybody has to agree. All right. So if I wanted to say insert a new line of data, everybody seeing the Google Sheet would have to give me permission to do that in order for it to happen. That's what a distributed ledger is. So it's a spreadsheet effectively that is viewable on multiple computers and is not stored in any one central place. If the computer that I have crashes, then I can still get access to the spreadsheet by going on another computer, because all the other persons that I shared the spreadsheet with still have access to it and still have it basically on their computer. That's the simplest way I can put it, but it's a far more complex system. But I do hope that kind of gets you to get a basic understanding of it. This is what a distributed ledger really looks like in terms of the infrastructure. All right. So the properties of the distributed ledger are going to be that it is programmable, it's secure, It's unanimous, meaning that all network participants must agree to validate each of the records. It's timestamped, so it gives you a level of traceability. It's immutable, meaning no one person can change a record. And once a record has been changed, it cannot be unchanged. That's what immutable means. And it's distributed, meaning it exists. There are multiple copies is used in air quote here, of the distributed ledger on multiple different computers. So it's not stored in any one place. Hence the word decentralization. All right. Now, if you think about it and you think back to the problems that we have with the money supply and the money system, these factors, these properties of the distributed ledger solve all of those problems. All right. We'll expound on that a little bit later on. All right. But I'm hoping that you would have understood basically know what a blockchain is. 2 minutes. All right. So we talked about what cryptocurrencies are. The blockchain is the underlying technology that the cryptocurrencies are built on. All right. So if you remember what we said about cryptocurrencies being money represented on a blockchain, it means that your cryptocurrencies are viewable on multiple computers, and no one person can go in and change the money supply of the cryptocurrency. A person can no longer counterfeit a cryptocurrency because everybody who is seeing the network is going to see that attempt, and they're going to block it because they're going to recognize, hey, this transaction is not valid. It doesn't belong to the network. So how is it trying to come onto the network? And everybody blocks it. So no longer can it, so the counterfeit problem is solved and the manipulation problem is solved. And cryptocurrencies inherently have all of the other features of money. They're easy to move around just because of its digital nature and stuff like that. All right. So this is some information about Bitcoin. I said earlier that it gained popularity in 2010, but it was first mined in 2009 by Satoshi Nakamoto. We still don't know who Satoshi is. All right. By the way, Satoshi Nakamoto is a Japanese name. All right. Now, Satoshi mined the first block of Bitcoin, meaning his computer solved the first cryptography problem on the Bitcoin network, and the reward for him was 50 Bitcoins. At the time, those 50 Bitcoins were worth $0.00. Today, those 50 Bitcoins are worth over $51 billion. And by the way, at this current point in time, Satoshi has mined over 1 million Bitcoins. And you can, by the way, I can send you Satoshi's wallet ID and you can see how much Bitcoin he has. That's the transparency that the distributed ledger allows us. I have 1 minute, and in that minute, I'm just going to show you guys some of the other cryptocurrencies. These are the cryptocurrency exchanges. We're going to talk a little bit more about them in the Telegram group. FeeXIO and Binance are two that you can access from Jamaica. BitTrue as well, but it's a little more complex. Like I have quite literally 4 more slides left to go through. And then we'll get into Pi as well as the questions. So we'll do the questions first, and if needs be, we will have another, I'll just restart the call again, and we will then do the setup of Pi and the explanation of the economy, of the Telegram economy. But since we have 40 minutes on this call, and it's just 4 or 5 more slides left to go through before questions, are you guys can unmute. Are you guys understanding so far what we've been covering?
Not everything. It's relatively new information. but
Okay.
I'm getting the gist of most of what you're saying.
Okay, and because I did this so fast, again, for the guys in the Telegram group, I'm going to append both of the videos. I'm going to upload the videos, so you guys will have a private link that will allow you to go and rewatch it. All right, if needs be. But I'll be in the Telegram. I'll be supporting. I'm going to be answering any question. And whilst we're doing the test economy, if at any time we need to have like a short Zoom call or whatever to explain anything, then I'll facilitate that as well. Okay, let's see who and who is here. I disabled the part. Okay, all right. So just Shakil is missing. Okay, all right. So we were talking about the cryptocurrency exchanges. Now, a few things to note about these exchanges. Number one, the majority of them are unregulated, and the regulation, by the way, and just a little note on regulation. Regulation, while its noble intent is to protect the naive or the uneducated person about different industries, the the ignoble function of regulation is control. So it enables and facilitates manipulation. That's the whole point of, well, not the whole point, but that is one of the consequence of regulation, especially corruption within regulation. And I can name you guys some examples. So what the cryptocurrencies did, being true to the idea of decentralization and in putting back the power in the hands of regular people, what they did was they made sure that they were what we call decentralized and also unregulated. So there is no single body that is going to say, look, this cryptocurrency cannot go to market, or this cryptocurrency cannot be used by people, it cannot be accepted by people. And if you created an asset, for example, then this crypto asset cannot go above a certain value or whatever. No, it is strictly in the hands of the people. So if everybody decides that Dogecoin is worth 100 million US dollars, Dogecoin's price can get to 100 million US dollars. I'm not saying that that will happen. All right. But as people's faith and trust in the different assets that come about increase, so too will the, I'm using air quotes here, but so too will the inherent value of these assets. I'm going to show you a wonderful example using some NFTs. So we're going to look at some NFTs after this as well. All right. Second to last slide. So complementary to the cryptocurrency exchanges, which is where you go to buy or acquire cryptocurrencies, you have the cryptocurrency wallets, which are also DeFi wallets that allow you to store your crypto assets. So you can store, not only can you store different cryptocurrencies in them, but you can also store different tokens, and these tokens might have different utilities as opposed to just being a currency. You can also store crypto assets like NFTs, so like digital art that is on a blockchain, or a smart contract, which might be like the deed to a piece of land. All of these things can be stored in various crypto wallets. Not all crypto wallets are created equal. So Trust Wallet, for example, might be able to store Ethereum coin, but it might not be able to store Dogecoin. All right. And complementary to your cryptocurrency software wallet. So all of these are apps that you can go and download. The link is right there on the page. But further to that, you have hardware wallets. And what a hardware wallet is, it's a device that looks either like a hard drive or a flash drive. And you can when you acquire cryptocurrencies, whether that is you mine them or you purchase them or somebody sends them to you can store them in either one of the two wallets that you have, either your hardware wallet, which would be like your safe, or your wallet, which is your cell phone, which would be like your online bank account. Okay. The next thing we're going to look at now is Pi. But we're going to do, I'm just going to complete the presentation and then we're going to go onto the Pi website and I'm going to take you through Pi. I'm going to give you my thesis on it, as well as I'm going to share the basic information as it relates to the utility of it, what it was intended for, the people behind it, the scale that it is at, and what the perceived value of Pi is. I should have on my glasses. Okay. Lastly, these are the things that I look for when I'm investing in any form of cryptocurrency or any form of digital asset. Now, it almost seems counterintuitive. Now, I'm a value investor by by profession, but also that is my investment philosophy. My investment philosophy is value investing. Now, when cryptocurrencies first came about, you saw the warning or the disclaimer at the beginning of the high volatility. Typically, a value investor would stay away from anything that is as speculative as cryptocurrencies. In fact, value investors tend to even shy away from the gold market, the forex market, or the commodities market. However, being a value investor does not limit you to the stock market, which is a conventional wisdom. What it simply means is that you do an assessment of the asset, whether that asset is a piece of art, whether it's a book, whether it's music, whether it is a gold coin, whether it's a car, collectible car. Watches are collectibles as well. So whether it falls in the category of a collectible, whether it's a business, whether it's an individual or a team, and whether it's a stock. So what you're looking for is what we call a value arbitrage, meaning that you see the potential of this thing, you have quantitative and qualitative data to support why your thesis is that its current value is less than what it is worth, and you're going to be buying, and you make the decision to buy that asset. That, in a nutshell, is what value investing really ought to be. So it is not counterintuitive, well, not as counterintuitive for a value investor to get involved in the forex market, or to get involved in buying watches, or to get involved in buying cryptocurrencies. As long as he understands the asset, he understands the value of the asset, meaning what it's worth or the cash flow that it can produce, and he is buying it for less than that value. That is very simply what value investing is. I'll give you one example. In December of 2020, XRP was selling for 22 cents per coin, right? The reason the price fell from the high that it has, the highest it has ever been, is $3. But the reason why it fell was because Number one, there were a lot of institutions that were taking a stake in its parent company, that's Ripple Technologies. And secondly, the SEC was suing Ripple Technologies for, they call it securities violation. However, this was another, I'm going to use the word ploy, in the sense that cryptocurrencies have already been deemed as not being an asset by the same Securities and Exchange Commission. So how is it that you're going to take a company to court for trading in cryptocurrencies, which is not under your purview because it's not a security? So therefore, you don't have regulatory control over it. You can't sanction anybody for whatever actions they might take involving that cryptocurrency. It's not a security. All right. However, the SEC, under the direction of some high net worth individuals, decided to take Ripple Technologies to court, and as well as its founders. The ultimate outcome was that the price of the asset fell because everybody thought it was now going to go to zero if they decided to halt trading or transactions in it. And the fact that they were in court typically puts off investors. It happens in the stock market, it happens in every single asset class. As long as there's a court case, one that they are likely to lose, you will see the price of the asset come down. That price is separate and apart from what the value of the asset is. So the understood value, or the perceived value within the marketplace for XRP at the time, was that it is worth circa $1. All right. And of course, subsequent to the multiple hearings that were had, and Ripple seemingly getting the upper hand in the case, which they did, the value of the price came right back to meet the perceived value within the marketplace. So my XRP that I bought for 22 cents has been as high as $2 and is currently trading at $1.50 something, I think. We'll look at the chart to see exactly where it is at. That's a 7x return in the span of 5 months, basically. And those are the types of returns that value investors tend to produce. That is why Warren Buffett is the best investor of all time, and that's why nobody has beaten his record as yet. It's because what he does is he buys assets when they are significantly below their value in the marketplace, and he just sells them when they go above that value. He doesn't sell them when they reach to the market's perceived value. He sells them when they go significantly above. So for me, a value for XRP that would be significantly above its current market perceived value would be $5 per coin. And at that time, I would liquidate my entire, well, probably 99% of my XRP portfolio. All right. And you can do the math and find out what the return on that would be, whether it takes a year or 10 years. You buy something at 22 cents and you sell it at $5. Calculate that differential. All right. So with that being said, these are the 5 things that I look for when I'm looking to invest in cryptocurrencies and digital assets specifically. Number 1 is the utility. So what's its intended use? What's the fundamental purpose of this asset? Secondly, who are the people behind it? What's the team like? Who is managing the project? Who came up with the project? What's his expertise? What's his background? And who does he have around him to kind of bring this project to fruition, and also to get it to a point where it achieves the first thing that I'm looking for, which is the intended utility. Third is support. So what is the support for in terms of like the marketplace? Who is supporting this asset? In the case of XRP, a lot of high net worth individuals backed XRP's development in the first instance. Perfect case in point. At this present moment, Elon Musk has taken a personal stake in supporting the development of Dogecoin. That alone tripled the value, the marketplace value of Dogecoin to me. All right, not to anybody else. I'm not necessarily concerned with what everybody else thinks about it. I am confident in the fact that if Elon Musk gets behind this project is going to reach its intended utility. And there are a number of other reasons why I'm bullish on Dogecoin. Caveat, that is not an endorsement for you to go and buy Dogecoin at its current price. Okay, I'm just saying, for me, the current price of Dogecoin is significantly below its market value. Second to last, scale. How big can this thing get? How much adoption can we really see of it such that it can be it can really be widespread and persons, it will now have a bigger appeal within the marketplace. And that brings me to the last point, which is perception. What's the current perception of this asset? What do people currently think about it? Are they bullish on it? Are they skeptical? Do they have a fundamental reason? Sorry, the first meeting just finished converting. What is their reason? What are they looking at? How do people perceive the coin? How do they look at it? So at face value, what do people think about the coin? Right now, at face value, everybody thinks Dogecoin to the moon. Hashtag Dogecoin to the moon. And so that is a good perception in the marketplace. Dogecoin at this present time is ticking 4 of 5 of those of my criteria for investing. There is only one thing that they need to do in order for me to be fully sold on Dogecoin. All right. Well, this is a close-knit group, but I'm not going to say what that is. We'll talk about it in the economy. All right. So with that being said, that's basically the end of the presentation. The the Zoom is also about to end, so I'm going to create a new Zoom. I'm just going to end this and you guys can rejoin, and what we're going to do is we're going to now talk through the questions that you have. I will admit that this took a lot longer than I thought it would, but I was trying to deliver as much information as I could for you guys to fully understand. And we haven't even started to talk about Pi as yet, but let's get through the questions and see how much we can get into Pi. And we're going to evaluate Pi based on these criteria, by the way, these 1, 2, 3, 4, 5 criteria. That's what we're going to use to do our analysis of Pi. Okay, so I'm going to end this session. I'm going to create a new one, and then we'll do questions, okay?